Hi, good afternoon, good morning everybody, and welcome. Thank you for joining us this afternoon, and thank you to IP Global for inviting us to present in this their latest webinar in their series examining what happens next in the property world post COVID-19. Today we're going to be looking at the UK student accommodation sector, how it performed following previous economic downturns, the impact of COVID-19 on higher education, whether having this defensive asset in your property portfolio might help mitigate volatility, and finishing on what universities are doing to counteract any impact. Let's start by welcoming the panel today. I have with me here in the Hong Kong office, I have Selina Williams, who's our head of investments. Selina Williams led the group's first investments into student accommodation back in 2011. A chartered surveyor, originally from the UK, been in Hong Kong over 10 years now, and has overseen our investments in 12 student buildings comprising more than 2,000 beds. Thank you for joining us, Selina. Joining us from the UK, we have Andrew Whiteley from Maven Capital Partners. He's an equity partner up there, and Maven, one of our UK-based asset managers with whom we've worked very closely on a number of our student deals. Andrew himself has 15 years direct real estate investment and development experience. Thank you for joining us today, Andrew.
My pleasure.
I'm Matt Dines, I'm head of investor relations and business development in Hong Kong with IP Investment Management. Been in Hong Kong for nearly 20 years now, and I'm here to oversee the business development and investor relations for the company. Just before we move on into the main body of the webinar, we have a question and answer session later on at the end of the webinar, but I'd like to keep it that if you have a question that you'd like to ask straight away, please do. Please email in or use the question box on your screen, and we'll endeavour to answer as many as we can during or after the webinar, and if we don't answer them, then we'll be in touch to try and pick that up with you afterwards. So moving on, there's no denying that these are unprecedented times, and they're having a big impact on many industries and investments, including real estate. But different sectors of real estate have been affected in different ways. Andrew, if I can turn to you and start with you, could you talk us through the impact of COVID-19 and how what the effect has been on the different real estate sectors?
Yeah, by all means. Hi everybody. We at Maven are investors and developers in all of the main sort of commercial and residential sectors, and there's no denying that the COVID-19 epidemic, global epidemic, is impacting on all retail real estate sectors, some more profoundly than others. If we just sort of use your slide there and sort of go through one by one, I mean, in terms of offices to begin with, it remains to be seen how corporates, companies are going to respond to the fact that maybe they've realized that office workers can work pretty efficiently from home. Certainly at Maven, we've been amazed at how well it's worked. And so in the aftermath of this epidemic, it's going to be interesting to see where the requirements are going to change, whether corporates are going to be reducing their use of office space. They're going to start allowing staff to work from home more actively, or whether maybe office space will start to be used in a different way. You know, there's obviously the need for social distancing, and most companies at the moment in the UK are preparing and trying to work out how they're going to use their existing offices and how they're going to ensure that social distancing can be implemented. I think one thing we'll start to see is that out-of-town offices, so on the edge of cities, towns, will become maybe more popular because reduced use of public transport, the ability to park immediately outside the building, and typically the availability of more space. But also with offices, what we've seen over the last few years is there's almost a historic shortage in most of the towns and cities, most of the major cities in the UK, of office space. Development has effectively dried up over the last few years. So I think we'll see some impact in terms of values, rentals. Some companies will go broke, and second-hand offices will become available. But again, we've seen a lot of those converted into residential use over the last few years. So that theme might continue for a while. Hotels, of course, are very definitely impacted at the moment. Most hotels are effectively empty at the moment, aside from being used by key workers and healthcare workers. Cash flows are under some pressure. I think we've seen an announcement in the last 24 hours from Travelodge, who are the biggest, the UK's largest budget hotel operator, that they are going to enter into a voluntary administration process, which will see them seek rental reductions on some of their hotels in exchange for maybe increases in their lease terms. So cash flows for most hotel operators will be under some pressure, and it remains to be seen when trading for hotels up and down the country will begin to return to pre-COVID levels. Estimates range from anywhere from 6 months to maybe up to 2 years. Will businesses still allow travellers, staff to travel and stay in hotels to the same extent that they were before? And when will tourism actively return to similar pre-COVID levels? These are questions that nobody really can answer at the moment. The residential market is a very interesting one. There is undoubtedly a lot of pent-up demand, but of course, if we're going to be entering into a period of recession for however long that will be, that will inhibit buyers' capability of buying property at the moment. Banks, we're going to be waiting to see how banks will respond in terms of availability of mortgages, but the fact remains that interest rates in the UK are at all-time lows, and you can fix for pretty long periods of time now for historically low cost of money. So I think Rightmove actually announced, Rightmove is the UK's main sort of residential website portal. I think they recorded record traffic on their website 2 or 3 days ago, something like 6 million hits. So it shows that the interest is there, the demand is there, and that that UK homeowners are, British love to own their own homes, and that won't change, I don't think. I think retail is the sector that's going to be impacted probably the most significantly, and I think what we're seeing now, aside from maybe supermarkets and convenience stores, which have fared pretty well during COVID, is that high street retail, shopping centres in particular. We were already in a period of decline for high street retail because of the growth in internet and online shopping. That has just been accelerated and exacerbated by COVID-19, and we're going to probably see more pressure on rents, and certain retailers coming under a huge amount of pressure. It's only probably from, I think it's next week, that that non-essential shopping is going to resume, and I think of all the sectors that we look at Maven, retail is the one that's going to be under the most pressure in the post-COVID world.
Okay, thanks, Andrew. That's interesting what you said about Rightmove. I'm not sure whether it's the British love to nose around other people's houses, or they're all in lock-in and nothing else to do, so it gave them a great opportunity to snoop from a distance.
Well,
it doesn't really matter, I guess.
They have also reported record numbers of phone calls through, because you can actually phone the estate agent through the Rightmove website. So right. That sort of activity is accompanying the more voyeuristic aspect of looking at homes.
Love it. Selina, we had thank you, Andrew, a little bit of background on an insight on all of those different sectors. Obviously, we're here to focus on the PBSA sector. Perhaps you could just briefly go through that, but also for those who aren't fully familiar with PBSA, maybe go through and explain in a bit more detail what exactly that stands for and what it is.
Sure. Okay, so specifically today we're talking about PBSA, which stands for Purpose-Built Student Accommodation. Now, many of you attending may have been to university yourself. You may have children who are going to or have been to university. So there are several different options for accommodation: PBSA, university halls, and HMOs, those are houses of multiple occupancy, so your sort of typical shared student house or flat. We're specifically talking about PBSA. PBSA tends to be purpose-built or purpose-converted. It's comparatively new in the UK. It's only really grown in the last, say, 10 to 15 years, although it's very well established in the US. As a result of that, it currently only accounts for a small percentage of the total beds that are sort of encompassed within student accommodation. Often the schemes might have amenities such as a gym, study rooms, cinema, private dining rooms, etc. Rents tend to be inclusive, include all the utility costs, whereas in HMOs you'll have rents, utilities on top of the rent. Pastoral care is high. There's often a manager or security on site, strong CCTV, so that appeals to parents, particularly parents who might be sending their children overseas to university, so worry about security. Mentioned student support already, and typically, though not always, it's direct let. So what we mean by that is the owner of the accommodation would appoint a manager, an operator, who markets and leases the building out to students. Sometimes operators or owners might agree a lease or a nominations agreement with university, but for the purpose of today, we're specifically talking about direct let student accommodation. So that's what we mean by PBSA.
Excellent. I guess in today's world, the pastoral care element is high on people's list of important. You've got to tick that box if there is a second wave or a third or whatever. So it's quite an important part of their decision-making process.
Yeah, absolutely. And a bit later in the webinar, we'll be going on and talking about how operators are adapting for the new normal.
Mm-hmm. One question I've been asked just quickly that's come through is we talk about student accommodation blocks, purpose-built student accommodation blocks. Is it possible that I could, as an investor, I could buy a room, just a room? And is that something that I could do? But is that worthwhile doing? Is that liquid?
Andrew?
Well, it's a business model that has existed in the past. Vita, who are one of the better-known UK operators, sort of started out really on exactly that model by developing and then selling on a unit-by-unit basis to investors, maybe with a sort of fixed or guaranteed rental yield. They would quote 6 or 7% rent net guaranteed for the first year or two, and that would form part of their sort of overall development cost. It's less common now. Operators and owners like to ideally retain control of the asset as a whole. From a sort of management and operational perspective, it just creates efficiencies. And also now that purpose-built student accommodation has become much more of a mainstream asset class, and yields have sort of compressed and values have increased over the last few years. Actually, for most developers and investors, keeping control of the building as a whole makes a lot more sense than maybe it did in the early days of the emergence of the sector.
Okay.
So it's less common now to be able to find a purpose-built block and just buy 1 or 2 units.
Okay. You mentioned performance there briefly. We're going to take a look at historical performance now. Selina, you've been overseeing these investments in student accommodation since 2011, when the world was just coming out of a financial crisis. It'd be interesting to hear what attracted you to it then and ongoing.
Well, back then, post GFC, there was a flight to safety. So capital. Obviously, there've been sort of big shocks to the market, banking crisis, various asset classes had a sort of lot of loss in value, and we saw capital moving into sectors that were perceived as being counter-cyclical. Now, what do we mean by counter-cyclical? Unlike, say, retail or offices that are directly connected to the economy, student accommodation, well, what do people do when they lose their jobs? They often go back to university. So student studying, universities can actually see an increase in applications and student numbers during recessions, after recessions and economic downturns, and hence why it can be perceived as counter-cyclical. Back in 2011 as well, student accommodation, or investing in the property asset of student accommodation, was seen as alternative. The big institutional investors were used to buying property that had long leases, upward-only rent reviews, strong covenant tenants, and the idea of a pension fund owning a building that you had to re-let every single year was just somewhat alien. However, PBSA has typically seen occupancy levels of around 97% and well above inflationary rental growth. So for a pension fund looking to match liabilities, it makes sense, it stacks up. So over that time, we've seen the sector move from being somewhat alternative to very much mainstream. And that has sort of been reflected in the big increase in volumes of transactions, the buying and selling of the buildings. And if you can look at this slide here, PBSA is the yellow, and you can see that it's consistently outperformed the average of all UK over the past 1, 5 and 8 years.
Thank you. Yeah, I was just looking at that earlier, and good, consistent, steady performance there. But if we look at maybe growth on a 10-year average, what are we looking at there? Particularly as this is a maturing market to a certain extent. Where do you see these rental yields or rental growth might be for the next 10 years as well?
Yeah, so as I mentioned, rental growth has been above our RPI, so RPI at 2.8% on average and 4.5%, I think that this slide shows, at PBSA, and that's outperformed the other sort of main core sectors of office, industrial and retail. In terms of yields, taking a look at this slide here, PBSA on this slide again is yellow. You can see that there's been some yield compression, but yields have generally remained pretty stable with a sort of slow downward pressure. And what this shows is, even at a time when there's still a sort of strong rental growth and more money coming into the sector, it's still a pretty decent yield compared to the other sectors. So warehouses, industrial below 5%, offices, prime offices, also sort of heading closer to 4%. Retail, on the other hand, which Andrew touched upon earlier, I mean, retail really has and continues to see some sort of fundamental structural changes, and as a result, yields are going up, which means values are coming down. And I read a statistic earlier saying that I think retail values have fallen around 25% in the last year, whereas student accommodation has been pretty stable.
Okay, thank you. That kind of brings, Andrew, that kind of brings us up to date with where we are now. But if we look at it, we've mentioned outperformance, steady rates, good yields. What's the attraction now to you as an investor or an asset manager?
Well, there are a number of sort of fundamentals, but I'd also add to that the fact that actually when you look at purpose-built student accommodation, it also provides actually a level of diversification to your sort of income profile, because if you've got a building with 200 units, unlike a lease to a single corporate occupier, if obviously it's not ideal if you're not at 100% occupancy, but if 10 of your students decide not to pay their rent in a particular year, or if you've got a rental shortfall for any other particular reason, you're still receiving the vast majority of your rental income. So that's another defensive quality that that purpose-built student accommodation provides. But just sort of looking forward there at the fundamentals in terms of demographics, the whole supply-demand balance equation, what we're seeing right now is this year, 2020, we are at probably the nadir in terms of the number of 18-year-olds leaving school and going on the path to higher education. Various theories as to why the birth rate dropped dramatically in the early noughties, but we're at a point now where this is going to be the lowest year of number in terms of 18-year-olds, and the outlook over really almost indefinitely, but certainly over the next 10 years through to 2030, is that the number of 18-year-olds on a year-by-year basis is going to grow exponentially, probably by around about 25%. We're also in a period where, at the moment, roughly, give or take, 33%, a third of 18-year-olds coming out of school are going on to higher education, going to university, which is actually a fair bit lower than the average in other Western economies. And various forecasts have been provided showing that could easily increase to 50 to 60% over the same period, so that by 2030, not only have you got potentially another 170, 180,000 18-year-olds leaving school, but that actually maybe up to 2/3 of those will choose to go on to university rather than straight into the workplace. Of course, also, we're in a period now where we may be going into a recession for a period, who knows quite how long that will be. And for 18-year-olds, you know, starting their career now may not be quite as attractive an option as it was. And, you know, as Selina mentioned before, furthering education or even going back to education will be a popular option. And we saw exactly, if you look at the graph showing how student applications and student numbers grew in the last financial crisis, it's a fairly clear trend. So so the number of domestic UK 18-year-olds is also a very important factor. And then we come on to international students, and of course we don't know right now how the current situation is going to affect the ability of international students to travel to the UK to start studying. But certainly we've seen very, very strong growth in the number of international students over the last 10 years, and the forecast suggests that trend is going to continue. I've seen suggestions that the number of specifically Chinese students, so we're expecting 80,000 Chinese students to start university courses in the UK this year. There are forecasts suggesting that with the growth of growing affluent middle class in China over the next decade or so, that could increase threefold to potentially to 240, 250,000 Chinese 18-year-olds or leaving school coming to the UK to study. So you've got a growing number of UK students, you've got a growing number of international students. Important also to remember that for international students, sterling is very cheap. So compared to maybe the US or Australia, coming to the UK to live, converting currency, it looks quite attractive. And actually, surprisingly, the UK, compared to the other English-speaking markets, Australia, the US, New Zealand, and Ireland and Canada specifically, the UK is still in terms of international student numbers, one of the I think it's ranked something like 5th out of 6th. Only Ireland, as a proportion of its student market, has a lower international student contingent. So again,
right. Sorry to interrupt you. That was the question I was going to ask there. What is the attraction for the international student to come into the UK?
Yeah.
Apart from the education, obviously, there must be something else that they're getting from the UK. And is there any government incentive to bring them over or make it much more interesting or open for the international students?
Yeah, well, the UK is quite generous these days with in terms of issuing student visas. There was legislation also passed by the UK government last year reversing some previous legislation, which now allows international students studying in the UK, once they finish their studies, they can stay in the UK to commence their career, I think, for a period of up to 3 years. So that's also a big attraction. But of course, it's the English language, it's the profile of UK universities, and the prestige of a UK university education, especially in the traditional red brick or Russell Group universities. And if you just look at what's going on in the world at the moment and the worsening relationship between China and the US, for specifically for Chinese students, the US is starting to look a far less attractive option than maybe the UK and the other English language, English-speaking countries.
Sure, excellent. So if you put all that together with what we were speaking about earlier, with regards to post-financial crisis or in a recession, we're looking at more and more students coming over. I think this next graph certainly puts some flavour on that one. What are we seeing with the numbers at the moment, Selina? Are they stacking up? Is it looking kind of the same?
Yes, I was on a webinar actually with a representative of UCAS. UCAS is the UK organisation that oversees the applications to universities. And despite some of the somewhat alarming headlines in the papers, they haven't actually seen a big drop-off in applications. I think some of the stats are beyond where they were at this point last year. They carried out a survey recently asking students whether or not they intend to defer, and again the numbers aren't higher than last year. They're similar to where they were at this point last year. One thing they have seen is that a larger number of students than usual at this point haven't made up their mind on which university they're going to attend. And that may partly be influenced by the recent announcement from the UK government that they're going to lift the cap on how many domestic and EU students that UK universities can take. So what they're proposing, I think they've actually approved it now, is that universities will be able to take 5% more than they had projected, 5% more domestic students they had projected. They're putting that 5% cap on so that the more popular universities can't take all the students from the less popular universities, but they've allowed that to increase so that they can accept more domestic students, which are of course part funded by the UK government, in order to make up for any potential loss in international students. Now, how that might translate through to people or students not having made up their mind yet, it might be that they're waiting to see if there are any other options, so potentially upgrading, if you like, to a university that they may not have been able to get into before, simply because it was full, there were too many applications. So I mean, that I guess highlights one of the strategies that we take, is that although we've been speaking so far about PBSA as a whole, which we are very bullish, we do always say that it is important to choose where you invest carefully. So the national statistics or the national trends are not seen in every city. There are some cities where there has been a lot of development, and there are some cities where there have been very few PBSA developments. So it is important to look carefully at the supply-demand dynamic in the specific location where you're looking to invest.
I absolutely agree with that, and in addition to that, it's important as a developer and an owner and operator of purpose-built student accommodation, first of all, to make sure that your micro-location within a specific town or city is what's wanted. You also need to be mindful of making sure that the specification is what the market there is requiring, and then also you've got to make sure that your rents are pitched at the right level. There's no point trying to charge students £200 a week for a room where your next door neighbour with the same specification in the same location is charging £150 a week. So you've got to have a good knowledge of the specifics of that town or city, and indeed the micro location and the sort of outlook for the university.
Sure. And we see here that with the number of students coming out, the structural undersupply of beds is, we quote a few figures there. Is that replicated across the UK, or are there specific areas that are more attractive for investment because there is a larger undersupply, or what's the situation now?
It does vary city to city.
Yeah, very much so. Yeah, the UK on average, I think the ratio of beds, students to bed is across the UK roughly 2.7 times. That London has more of an undersupply, and Edinburgh, you can see as well, has a greater undersupply. There are some cities in the UK, you might look at, for example, at the moment, Cardiff or Glasgow, where there's been a lot of development over the last 10 years, and that supply-demand balance needs to correct itself, which it will do as student numbers start to increase. Another thing that's happening is that there is a housing shortage, shortage of family housing in the UK, and it's still the case that the majority of students going into their second, third, and postgrad years are living in HMOs, which are houses of multiple occupancy, effectively family houses that have been converted to a number of bedrooms with shared facilities, typically owned by private landlords. Sometimes the reputations are not great. They're not managed environments. They don't come with the welfare and all the sort of facilities that purpose-built and security that student accommodation, a purpose-built student accommodation can provide. The government in the UK and the local councils are actively looking to free up that housing stock. So there is a real push and a real drive and motivation to try to get students out of family housing and into more managed environments like purpose-built student accommodation.
Okay, fantastic. Thanks, Andrew. Looking back, just taking a step back and revisiting the PBSA sector, I know we touched briefly on the impact of COVID-19, but looking now at those four distinct areas, what are the impact, and then we can move on and look at what are the universities doing to counter this impact.
I'll start. Okay. Well, current occupancy is down. So I'm talking about this current academic year. When the UK entered lockdown, face-to-face teaching was suspended, and many students went home. Some, of course, stayed in their halls, or in their PBSA buildings. So our portfolio, we have, I guess it's probably around 50. It varies by building, but around 50 to 60% of the students are still there, and the others have gone home. Some major landlords, the likes of Unite, made very high-profile announcements about refunding students, which smaller landlords couldn't necessarily afford to do because they have salaries to pay in terms of building managers and loan repayments to make. So it was more of a marketing exercise. The vast majority of landlords haven't refunded student rents, but there are some short-term issues. Operations, of course, have changed. A lot of the buildings were quite social environments. A lot of sort of community events that would usually be organised, and all of those are on hold. Many of the building managers are working from home and having to contact and keep in touch with students by email and by phone. Valuations of the properties, minimal. I think that the market generally sees the medium-term and long-term outlook of student as remaining the same. It's very strong. There may be some short-term impacts on rent collection and potentially occupancy for some buildings next year, but that is very much the short-term risk. So the impact on valuation has been a few percent, sort of reflecting where rental refunds have needed to be given. Andrew, do you want to talk on the next?
Yeah, you may have a few more details on the student application side of it, Andrew.
Well, student applications have held up very well. So I think in terms of international students, that's actually applications are actually up by about 10%. UK student applications are also up. Obviously, we're waiting for A-level results. The exams haven't taken place, but results will still come out on the same day, which is I think it's around about the 13th of August. But demand and reflected in the number of applications remains at a very high level. I think it'll be interesting to see how the universities react. There isn't going to be a universal sort of policy in terms of how teaching is implemented for next year. Some students looking for the sort of stereotypical student experience or fresher experience, which is sort of seen as a rite of passage for many 18-year-olds, might decide to defer the start of their university life until next year. But at the same time, the options available to them during that gap year won't be what they were. Traveling and those sorts of things won't necessarily be available. So it could well be that most students will just decide to get on and get their further education underway. Mm-hmm. So at the moment, applications are very strong, both internationally and from a domestic perspective. We will have to see what happens. It may be that some universities will decide to delay the start of the academic year by a semester. It may be that for the first semester there will be increased online teaching. A couple of universities have already announced that that's going to be the case, especially with the larger group teaching lectures. But
we've seen a number of attention-grabbing headlines to that effect, where everything's going to go online. There's no need to return, but that's not quite the truth, is it?
No, I think the media obviously likes to dramatise announcements. So the University of Cambridge was probably the most high-profile early announcement, where they said we're moving all our lectures online for the whole of the 20 to 21 academic year. And that's all that a lot of the media articles reported. Whereas actually, if you go back and read their full statement, they add, but all our other teaching, i.e. tutorials, which is part of the Cambridge University education, lab work, small group teaching, etc. We will still be aiming to do that in person. So students do need, where possible, to return to the campus. And on the whole, that's been the approach that most of the universities have been taking. Obviously, they rely heavily upon tuition fees and international students' tuition fees. And they've been told by the government that they can still charge full tuition fees as long as the quality of the education remains high. And they've also been told that they have to give students some certainty over how the courses will be delivered. So I think the announcements that lectures will be online, it's partly managing expectations and making it clear to students that they will be able to deliver a high quality education, and therefore it shouldn't put them off applying to the university. But I think to get the real university experience, I think students will, wherever they can, be attempting to travel back to their university, even if that means 2 weeks in quarantine when they first land in the UK.
So I guess a gradual move back to university with a hybrid system of face-to-face, online, a combination of both. Would you agree, Andrew?
Only for a limited period of time. Yes, I think that's absolutely the case. You can't replace on-site teaching. Online does serve a purpose, but I mean, you can think of a lot of courses where it simply wouldn't work. If you're studying medicine or teaching or engineering, you need face-to-face teaching and tuition, and only for a very limited period of time. I would have thought maybe the first semester of next year will there be more of the sort of online tuition, but only really for the larger groups in general, where you've got 100 people in a lecture theatre.
Sure. So short-term blip, long-term trends looking positive for the sector.
Yeah, absolutely.
Right. And what's the marketplace looking like at the moment? What's the investor appetite for these kind of deals? Maybe buying in or selling on, and larger institutions buying into the marketplace. You see the number of deals done.
Well, there haven't been that many deals done at the moment. Buying and selling is difficult, because getting things like building surveys and valuation inspections and those sorts of necessary on-site activities has been difficult. But certainly deals that were agreed pre-COVID have been completing. We haven't been seeing reductions in values. There've been maybe an increase in rent guarantees demanded by buyers to cover this current year, specifically mainly this current year where there may have been some shortfalls. In terms of values, yields are remaining largely where they are. I've heard reports that there is approximately 8 billion of raised and committed capital waiting on the sidelines to buy UK direct let student accommodation. So there is a weight of money looking to get into the market. They're recognising all the attributes and the qualities of the sector that we've talked about previously. We saw a deal with a buyer that we know very well because we sold a portfolio to them a year ago, 90 North, who represent a Q80 pension fund, who just acquired 2 buildings, one in Edinburgh, one in Leicester, which I think we've got on the slide here. That was a total portfolio, smallish portfolio deal of £22 million. But the yields that they bought those assets for are very much in line with where the market was pre-COVID.
Okay. Do you think they're waiting that ton of money sat on the sidelines? Is it waiting for a discount, a distressed situation, do you think, Selina?
I don't think so. I don't think we're going to see distressed sales in the student sector. That would suggest that values have plummeted, and they just haven't. I think that the medium-term fundamentals remain strong. So no, I mean, yeah, we see it as a sort of safe, steady investment that doesn't have the volatility of some of the other sectors.
Okay.
I think we're sorry, I think we're running a little bit short of time, so perhaps we just quickly sum up.
If I could ask you both just to summarise and have a few questions from people out there.
Thank you. Yeah, from our perspective at Maven, looking at all the different sectors and the outlook in the current world, for us, there is no sector that we would rather be exposed to right now than student accommodation. All the fundamentals are really strong in terms of supply, demand, growth, the outlook for growth. The banks actually share our view. Most of the banks are looking to increase their loan book in student accommodation over the next few years. So, with the defensive qualities and the counter-cyclical qualities and the outlook for future growth, our view at Maven is that it's probably the best sector to be investing into right now.
Okay, thank you.
Yeah, Selina? I think Andrew summed it up well, so why don't we throw it open to the floor and see if there's any questions.
We've had one that's come in. We can take just quickly. Other than the UK, are there any other markets that IPIM is interested in for developing, investing in PBSA assets?
Yes, we quite like Iberia, Spain and Portugal, so we are exploring those markets. Our immediate focus is on the UK, but those are markets that we may be looking at in the future.
So there's just one coming in, we're just trying to see. How is the rental stability when you need new students every year or semester? It seems like tough work for leasing. And either one of you wants to go with that one? Andrew.
So you asked about rental stability.
Yeah, it's rental stability when you need new students every year or semester. Is it a tough environment for leasing?
Okay, well, I mean, almost all the contracts the leases we enter into with students are 1-year contracts. They require, where they're domestic students, we require parental guarantees. They have to pay deposits. And where it's an international student who can't provide a parent's guarantee, typically those students are paying their full year's rent in advance. So we tend to find that instances of uncollected rent or other sort of debts are very few and far between, and the operators we work with are very experienced and very effective at minimising rental shortfalls.
Okay. Just on the international theme there, I think we may have mentioned it, but we give a little bit more detail because I think some have gone home, some have stayed, but we spoke specifically about Chinese students. Do you see them managing to get back to the UK, or are they some still in the UK ready to go back to university?
Actually, in some of our buildings that are popular with international students, we've still got a lot of students in. They didn't go home because when the lockdown in the UK started, I mean, obviously the UK hasn't fared terribly well during COVID, so they were concerned about taking the virus back to their families in China, so they stayed. And in fact, we're in talks with some of our students about extending their leases so that they can remain here over the summer. Will the students in China travel to the UK? Yeah, I think although there may be some concern and there will be a 14-day quarantine, I think students will try to get there. There is no specific restriction against them travelling to the UK. If potential students are weighing up between the UK and the US, I think Trump has, in the last day or so, announced that he's banned direct flights from China to the US. So that won't help the political situation. The political tension doesn't help, and it may divert students who perhaps were going to go to the US to the UK instead.
Yeah, the other thing to mention there is the NHS in the UK, which is actually seen as something of a sort of beacon of excellence. And, you know, unlike some other countries, and I think specifically really maybe about Italy and Spain, at no point has the health service here been overwhelmed. It also provides healthcare for everybody. So, you know, if you're an overseas student here and you fall ill, heaven forbid, you will be taken care of properly and just as anybody else would in great facilities. So I think that's looked upon internationally as a real advantage, and certainly when you compare to the sort of healthcare system in the US, it provides a real degree of security and comfort that the NHS is there, and how it has actually, we've had obviously the statistics haven't been great, but at no point has our health service been overwhelmed.
Yeah, no, we've certainly viewed that from afar as something that's worked well, and I guess it leads on to that whole pastoral care side of it all. And are we seeing a changing preference from clusters to 1-bedroom apartment, 2-bedroom apartments? There seems to be a migration or a thought process along those lines.
That's a really important point. I mean, actually, a lot of universities are having to look at their own halls of residence, which are going to become pretty well unsuitable to social distancing. You might have non-en-suite accommodation, for example, where people are having to share bathrooms and share kitchens and other public areas. That sort of accommodation just will be redundant for the time being. Similarly, houses, HMOs, houses of multiple occupancy, you might have 4, 5, 6 bedrooms with a single bathroom. Again, will not be ideal for purposes of social distancing. So we're seeing with student accommodation, purpose-built student accommodation really has two room types. You have studios, which are individual rooms with their own kitchen area, their own ensuite bathroom and study area. There is no doubt that popularity and demand for studios is growing. The other type of accommodation is what's called a cluster apartment, where you walk in through a door, you've got a corridor, maybe 5, 6 or 7 bedrooms, usually en suite, but with shared kitchen and communal facilities. We are actively seeing in our own properties students who previously booked cluster accommodation or accommodation in HMOs who are looking to shift into studios because effectively you can isolate and have all the facilities that you would need, as well as, you know, you mentioned all the welfare and security that a managed environment provides. So that is very definitely a trend at the moment.
Are you seeing that as well, Selina, in some of the projects or the universities where we have projects?
Yeah, absolutely. That's a trend we see.
Okay, well, look, I think we've come to the end of our time. I think we could have gone on and on and on, but we've only got a limited amount of time. Thank you, Selina. Thank you, Andrew. Thank you all for joining us today. Hopefully we'll be able to do this again at some point very soon and be able to join us. We've got a list of the questions that if we haven't answered them, apologies for that now. We will try and get onto that and get back to you where we can with follow-up questions. I'm sure we've done a recording of this, so if you want to see it all over again, then let us know and we can send that out to you. But thanks again for joining us, and thank you and goodbye.
Thank you.
Bye. Thanks, Andrew.